Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. With oil prices skyrocketing, crude being as high as it's been since 2014, and Brent futures reaching a 3-year high, we are looking at serious opportunities in the energy sector for making good money. And in today's video, I'm going to talk about 3 stocks that can help you do just that, with upside potentials of almost 20% for some of these, and as well as really strong dividends. These are fantastic plays that you should consider for your portfolio. I am invested in one of the 3, and I'll let you know which one in today's video. But let's get into it. Alright guys, welcome back. Thanks so much for joining us. If you're new to the channel, we appreciate having you. Hopefully you find something of value here. If you do, don't forget, smash that thumbs up button for me. Consider subscribing to the channel if you haven't already. Now, it's frequently said in the finance world that if you use a product a lot, instead of buying the product, you should consider buying the stock. Well, oil prices going up isn't so good for you when you get to the pump. But with as often as you might fill up your vehicle, and as often as everybody has to fill up their vehicles, it would be silly not to be invested in the energy sector. So if I have to spend my money on gas, I might as well make something back in the process. And that's the focus of today's 3 stock picks we're going to look at that have fantastic dividends as well as really strong upside potential in the next 12 months. So let's look at our article for today. And this one came off MoneyWise, and it says oil nears 3-year high. So grab Exxon and 2 more energy stocks with big dividend yields. Now, the rebound in oil prices has left kind of an opportunity here. Sometimes when I buy into dividend stocks, I do so not necessarily understanding the direction of the company. They may kind of just stagnate. We might just see kind of just left to right, no real growth, but no real depreciation, and that's okay as long as I'm getting the dividend. Now, with these stocks, you can count on the growth as well as the dividend, and that's the best of both worlds. So let's look at these 3 companies that offer between 10 and 20% upside potential in the next 12 months while offering up to 5% quarterly dividend yields. The first stock on our list is ExxonMobil, ticker XOM. And while many big energy companies are steadily moving towards renewables, Exxon is committed to oil and gas, providing investors with a relatively pure way to jump into this space. Alright, so what I'm going to show you guys is the tip rank screen for ExxonMobil so that you can see the projection over the next 12 months for Exxon to go from 61.67 roughly to 68.50, which is over an 11% upside. They have a moderate buy with 9 ratings. And while you look at that, let's talk a little bit about Exxon. So they're not necessarily going to win any favor from the environmentally conscious folks. However, the commitment that management has to fossil fuels is much less risky of an approach for its shareholders. For example, Exxon earned $4.7 billion in profits on revenue of $67.7 billion thanks to the significant recovery in demand for oil. And the chairman and CEO, Darren Woods, said that they're realizing significant benefits from an improved cost structure, solid operating performance, and low cost to supply investments that together are generating attractive returns and strong cash flow to fund our capital programs, pay the dividends, and reduce their debt. With a fantastic dividend yield of 6% and a stock that's sitting around 11% below their 52-week all-time high, this is a stock that I'm comfortable with saying that it has great potential going forward. We're going to see this stock increase in value and continue to pay out consecutive dividends, which as a dividend investor is something I'm always looking for. The next stock on our list is Chevron, ticker symbol CVX, and this is another oil leveraged behemoth that income investors might want to consider. And now, while the company hasn't invested much capital in renewable sources of energy, the significant position they have in an attractive Permian Basin and impressive free cash flow generation should give investors plenty of reasons to be bullish. And again, showcasing the tip ranks 12-month screen here, you're looking at a moderate buy, but you've got 17% potential upside on this stock, guys. So CVX is at about 105, maybe 106 today, and they're looking at 123.36 within the next 12 months. And the high-end price target is $145. So there's a lot of potential for this stock to grow. And there's no wonder why in the most recent quarter they managed to produce earnings of $3.1 billion on revenue of $36 billion, while their free cash flow clocked in at a multi-year high of $5.2 billion. And management cited improved market conditions and merger synergies for their strong results. The chairman and CEO of this company said that our free cash flow was the highest in 2 years due to solid operational and financial performance and lower capital spending. We will resume share repurchases in the third quarter at an expected rate of $2 to $3 billion per year. And they do have about also an 11% drop from their 52-week high, just like the last company we talked about, and have a great dividend yield of 5.3%. So we've got 6% yield, 5.3% yield, both down 11% from their all-time highs and both growing consistently. So these are absolutely the kind of opportunities I look for when investing my money into dividend and income creating funds. Number 3 on our list is BP, ticker symbol obviously BP. So for investors looking for a really big energy stock that's a bit more on the progressive side, BP might be the answer for you. Our tip rank screen is showing a moderate buy with about a $28.15 current price tag, but a 12-month price target of $34, which is over 20% upside, and the high-end price target of $37 is even higher than that. And you have to wonder whether or not that increased price target is due to management's plans to reduce hydrocarbon production by 25% by the year 2025. And by 40% by the year 2030. That is easily the most aggressive transition toward renewables among the major oil companies. And that could put BP in a stronger competitive position than its industry peers over time. And the best part is, as they discuss this movement away from oil investments, it doesn't seem to be impacting their near-term results negatively at all. So they're still gaining on the oil sales while talking about transitioning into more hydrocarbon ESG type productions. In their most recent quarter, they earned $2.8 billion while generating $5.4 billion in operating cash flow. They even increased the 4% dividend while starting a share buyback of $1.4 billion with surplus cash flow from the first half of this year. So that increased dividend led to a dividend rate of 5% every quarter. They are also down about 8% from 52-week highs. So BP also has room to grow and a fantastic 5% dividend quarterly. All right, guys, so those are the 3 hot energy stocks that we're going to talk about in today's video. Hopefully you found some value in it and can now start your due diligence period on these 3 stocks to decide whether or not they fit into a dividend or income portfolio for you, for your family, for whatever the reason might be. All right, thanks so much for checking out today's video. Hopefully you found some value. If you did, smash that like button and consider subscribing to the channel. Also, leave me a comment in the comment section down below. Let me know what you think of these 3 stocks and whether or not you are or will invest in them in the future. As always, this information is just provided for education and entertainment purposes only. I am not telling you guys what to invest in or what not to invest in. And because I said I would, just to let you know, the one I'm invested in and I bought more of today is ExxonMobil. Thanks for checking out the video today, guys. Until next time, bottoms up.